Oh, yes. Let's get ready, traders. Let's get ready. Let's get ready. Boom, 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 boom. Ha ha. Are you ready? ¿Están listos? Gotta love this. Gotta love this. Gotta love this. I love it. I love it. Let's go, guys. Get nice and comfortable. Grab something to write with, traders. Grab a pen, notebook, a notepad, a journal of some kind. Maybe you want to grab the beverage of your choice. Nice little comfortable chair. Get nice and comfortable, traders, because I am going to rock your world. You know it. I'm so glad you can't see me right now. Woo! Happy Saturday. Oh, yeah. I love these events, guys. I love these events. Let's go. Just want to make sure everyone's ready, comfortable. You got a little coffee, a little water, a little something to quench your thirst. All right, let's go, guys. Welcome, traders. Welcome, 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 welcome. Welcome to another live free event. I try to do for my audience and my following, I try to do one of these on a specific topic every single month. I try to do that every single month. And this month, I have something very special. It's actually something that I haven't done. I can't say I haven't done an event like this ever, but I haven't done an event like this in many, many years. I would say that the very last time I did an event on the topic that we will talk about today is in 2010. That's 10 years ago. 10 years ago is the last time I did a free event like this for you on this specific topic. Now, in all honesty, recently I've been talking a lot more about this topic called wealth, which some people might refer to as long-term trading, not short-term day trading. All right, so I want you to understand that today we're going to leave the realm of short-term oriented trading. All right, we're going to leave the realm of short-term trading and we're going to delve into a completely different arena, but an arena in the markets that's just as important. And some people might regard this arena as far as market play even more important than your short-term oriented trading. And so most of the world actually knows me for my short-term oriented skill, my short-term trading. I became a household name on Wall Street all the way back in the late 1980s, early 1990s because of my prowess at coming out of the open and trading the markets aggressively in the first 20 to 30 minutes of the day. And I was one of the best at becoming the most profitable in a short period of time. This sort of led me to start my own firm and to actually advise other firms on Wall Street back in 1994 in terms of how they could have their traders actually do the same thing. So I branched away from Wall Street to actually teach Wall Street traders and other Wall Street firms my specialty. And that's how I went independent, no longer working for another Wall Street firm, no longer trading other people's capital, but trading my capital and the whole 9 yards. So because of my beginnings in the markets, right, this way, I began as a short-term oriented trader. And because my notoriety, my fame in the United States rose in that area, most people have not understood that the vast majority today of my market participation is actually not short-term oriented. Now, I do day trade every single day. There's no question about that, and I will never stop doing that. But the vast majority of my capital is actually deployed on what I would call the wealth side of the equation. It's on the long-term approach. And what I want to do today is convince you to take this two-pronged approach to the market. I don't want you to think or believe that one style is better than the other. And I also don't want you to think that you're supposed to choose. Should I be a short-term oriented trader or should I be a long-term wealth trader? No, it's not a choice. That's like saying, should I be male or should I be an adult? No, I'm a male and I'm an adult. All right. Short-term oriented trading is income related trading. You trade the market short-term, 30 minutes, 45 minutes, 2 hours, in and out of plays. You do that for income. You trade the markets from a long-term perspective for wealth, for building a legacy, for amassing a fortune that you hope one day you can pass on to the next generation and they can pass on to the next generation. This form of market play is about generational wealth. Do you understand? This form of market play is about building something that lasts. This form of market play is about creating better and better generations that follow you. This is about wealth. This is the big game. Now, I don't, once again, want that to sound like we are downplaying the short-term oriented trading, because it is from the short-term oriented trading that I actually had the wherewithal to go into the long-term approach. So this is what I did historically, guys. I built up consistent profitability on the short-term, my short-term oriented trading style. Then after becoming really very, very good at that, I began to generate more income than I needed. And so a portion of my trading gains from the short-term perspective would then be dedicated to going into McDonald's. A portion would then go into Microsoft. A portion would go into Apple. A portion would go into Nvidia. A portion would go into Disney. A portion would go into Nike. And so I amassed over time this huge wealth portfolio that continues to exist today. Now, listen, all the way back in 2009, I decided to create a wealth trading team because I felt at that particular time in the markets that we were at a critical low historically. And oh my God, was that so amazing to do. I could not have been more right in my entire career. And it led to us having 10 years of illustrious gains, my wealth trading team. And this is some of the things I want to talk to you about today. I want to show you some of the plays, but more importantly, not only do I want to show you how we amassed this huge 10-year run in the markets that has made many of my traders super wealthy. And I'm hoping to actually someday have them live on this show to interview them and to talk about their experiences with this wealth approach and how it's changed their lives. And that's coming up. I've got a lot of interesting things coming up for you in the future here. But not only do I want to delve into those specific plays that helped us do this over the last 10 years, I want you today to walk away with the method that I used to accomplish this over the last 10 years. So that's one of the things I want to accomplish. I want to share with you exactly how I did it. And so by the time you end this session, you will know my method for the most part. Not 100%, but good enough for you to start deploying it, number one. All right. And impossible for me to do it in 2 hours, but you're going to get a lot of it in 2 hours. Number one. Number two, before you end, I want you to understand what I believe is next and how we, you and I, can profit from this together. So by the time you leave this presentation, you're going to know exactly what I believe is going to happen next and how I am preparing to profit from it. And so you're going to know exactly what I plan to do. That's the second thing I want to accomplish. All right. The third thing I want to do is I do want to invite you to take this journey with me together forever. And what I mean by that is I'm hoping to convince you that this is something that we do until the day we die. And we do it together, side by side. I want to give you the opportunity to know every single move I ever make in the markets from this day forward, the rest of my life, the rest of your life. And this is what my wealth dream does. We do this together. Every single time I make a move, we do it together. Every single time I'm thinking about something, they know it. We get together, we discuss it. Boom. They and we, with me, we take this wealth journey together, step by step, play by play, ad by ad, sell by sell. We do it together. And over the past 10 years, guys, it has been phenomenal. And so, like I said, I am more known in the industry for my short-term oriented trading, but over 90% of my capital is deployed this way. So it's time for you to learn how I handle the markets from the wealth side. And before we kind of delve into the material, I want to say this last thing. It's easier. Oh, yes. Now, I've always spoken to you about short-term oriented trading is simple, but it's not easy. 92% failure rate. But this style of market play is tremendously easier. It's easier to make money. Oh, yes, easier. It has a higher success rate than short-term oriented trading, much higher, much higher. That's the beauty of it. So I've always sort of liked I've always liked if you can learn how to trade the markets short-term oriented, you're going to kill it on the wealth side because you've started with the most difficult thing. And then you take the skill that you've developed in the most difficult part of the game to the easiest part of the game and you kill it. And I'm going to show you today how you can kill this. I don't care how much capital you have today. I don't care if you're starting off with $500 or you're starting off with $5 million. We can do this together. I'm going to show you. All right. So let's get started without any further ado. I see your comments here. Boom, boom. Brock's here, guys. Brock is one of my trading kids. I have a trading kids program, guys, and Brock is amazing. Brock, how old are you? 11 years old, right? I think Brock is 11 years old. He can out trade you. He's that good. Tradingkids.com. All right. Fantastic. Okay. That's a different thing. That's a different thing. But good to see you guys here. I'm so happy that all of you are here. Guys, I had this live in 2 different languages, English and Spanish. In the future, I will have all of my live stream sessions here in 3 different languages. I'll be including Portuguese, which I'm very, very excited about. So I've got about an hour and 45 minutes to create some magic. And I promise you, I will. All right. So sit back, relax. I want you to take some notes, listen intently. I will try to take some questions. Usually I have to do that after the event if I want to keep the time. I don't like these things to go too long. People get bored. But let's go. Let's go, guys. Coffee. Boom. All right. Let's do this. Let's do this. Let's do this. Let's see. Boom. Okay. Trade for wealth. Okay. Trade for wealth. Now, guys, look, very quickly. Long history in this market, traders. Long history in this game. You are not dealing with someone who just learned how to trade 2 years ago. That the majority of today's industry is made up of that, unfortunately, but you're dealing with a pioneer in the industry, guys. My first trade was placed in 1981. I became a professional trader on Wall Street December 6th of 1986. Actually, that's December 5. That's an error. I'm known as the father of swing trading. That's right. I coined the style swing trading. I gave that style its name, swing trading. I'm regarded in the industry as the father of swing trading. I popularized that style starting from 1992 in the industry. And if you want to see some of my older work with swing trading and how I popularized it for the industry, just Google Oliver Velez swing trading, and you'll see some old stuff on me promoting and advertising and trying to popularize this style of market play for the industry. Guys, Barron's, which is the most respected paper for professional institutional traders and organizations in the entire world, in the entire industry, they ranked me number 1 in 1998. So they're like, listen, if you want to do this properly, you go to Oliver Velez in 1998. I was ranked number 1 in the United States in 1998 by Barron's. Dow Jones the following year dubbed me the Messiah of trading. Right, that was a huge honor. I was chosen to be the representative for the entire trading industry in 1999, and again in 2000, and again this year in 2020. So 3 times throughout my career, I'm the face of the entire professional trading industry. I am the author of 5 international best-selling books that are written in 5 different languages: English, Spanish, Mandarin, Japanese, and German. And these 5 books sell more copies than every other trading book that has ever been written combined. And that is not by mistake, traders. That is not by mistake. That is because they're very valuable. Today, I own and operate one of the largest trading organizations in the world with over 10,000 traders across 92 different countries, a portion of which actually trades my personal income, my personal capital, I should say. I continue to advise and speak for financial organizations all over the world. And this year, I had the great honor of being an XP expert. And that is one of the highest honors you can receive as a professional in this industry, becoming an XP expert. And this year I was chosen to be an XP expert. Okay, guys, this is an article written on me in 1999, dubbing me one of America's top traders in the country. Okay, this is the Barron's ranking me and my services number 1 in the entire United States. This is an image of my books in all the various different languages. And this is where I'd like you to follow me. Now, you're here and you're at, in my opinion, one of the most dynamic trading YouTube channels in this industry. I put a great deal of effort into putting out a valuable piece of content for you 365 days a year. So every single day you receive something that moves you one step closer to mastery, that raises your level of market sophistication. So I want to make sure that you follow my YouTube channel. I want to make sure that you subscribe, that you turn notifications on, and make sure you turn all notifications on so that you don't miss any lives or any of the amazing things that I have planned for you coming up. You can follow me on Facebook. I am extraordinarily active on Instagram, but I want you to know this. I only have 1 account, traders. This is the one right there. Let me circle it again, please. I want you need to understand this. There are, unfortunately, in this business, there are always people trying to defraud people, and it's just something we have to live with. But I need you to be smart. This is the only channel that I have. I do not have another channel on Instagram. There are many people posing as me with a similar channel trying to dupe you into you giving them your money. Do not fall for this. So there is no other channel, OL Velez 007 dash dot 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 or dot 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 dot, nothing. This is the only channel that exists, the only Instagram profile. So if it's not this one, you are not dealing with me. Okay, please understand that. Okay. Go. All right, now here we go, guys. Let's talk about, let me see if I can do this and bring myself in here. Why don't I do that and bring myself in there? Yeah. Okay. Now, guys, what do we need for wealth trading? Let's get our tools together. We always have to start. What are the things needed? All right. So we need 4 things. We need a monthly chart. Now, this is the time frame that I use for wealth trading. On intraday trading, short-term oriented trading, I trade with a 2-minute time frame. 2-minute chart, 5-minute chart. Those are the 2 time frames for short-term income trading. All right. Small little slices of the market. But when you go to wealth, you need a big slice of the market, a monthly slice. I need a chart where every bar represents 1 full month of trading. Do you understand? So we need a monthly chart. I want every bar to be the picture of 1 month of trading. We want to put a 20-period simple moving average on that monthly chart. We're going to put a 50-period simple moving average on that chart, and we're going to put a 200-period moving average on that chart. Now, I'm not a huge relier on a ton of indicators, but moving averages, in my opinion, are amongst the most superior indicators you can use. So price and moving averages, as far as I'm concerned, that's all you need. And trust me, guys, over the last 38 years of trading, 33 of those years, almost 34 of those years professionally, I've experimented with virtually every single moving average you can possibly think of and every single technical indicator that exists in this world today. And I can tell you, after this many years of experimentation, moving averages are by far the most superior of all, and the simple version of moving averages. I've found no evidence that the sexier varieties of moving averages, like the weighted moving average, the triangular moving average, the exponential moving average, none of those have demonstrated any greater superiority than simple. So I, for one, am a supporter that when you can keep it as simple as possible, please do. There is power in simplicity. Okay. What I'm going to do is just go back to the full screen here. Now, here is a monthly chart of the NASDAQ. Okay. Listen, every bar represents 1 full month of trading, with the exception of the current monthly bar. So we are in August 22nd. This bar is not complete, has not completed its month yet, but every previous bar is a full month of trading. Now, of course, your green bars represent when the month started here, but and the month ended above the starting price of the month. So on the first trading day of the month, if the let's put it this way, if the last trading day of the month is higher than the first trading day of the month, you're going to have a green monthly bar. If the last trading day of the month is lower than the first trading day of the month, you're going to have a red bar. So green bar, the last trading day of the month is higher than the first trading day of the month, green bar. Red bar, once again, the final trading day of the month is lower than the first trading day of the month, you've got a red bar. Now, one of the things that you can instantly do once you bring up a monthly chart is you can determine which side of the market is in control of the market. Is it the buyers in control or the sellers in control? You need to understand that all the market really is a tug of war between two sides. It's a sporting game, if you will, between two teams. One team's called buyers or bulls. The other team is called sellers or bears. Now, here's what you can do. One of the things is, which color is the dominant color? Are there more green bars than there are red bars? Now, you can look over the recent history over the last 8 years or so. This is like about 8 years. Okay. And you can clearly see that there are far more green bars than red bars, which basically is telling you right off the bat that buyers are in control of the market, that buyers are stronger than sellers, that bulls are more dominant than bears. In addition to that, in addition to just a simple bar count, more green bars than red bars, which team produces the fattest bars on average? Now look, here's a bunch of little tiny bars, right? But when you see a big bar, here's a big red bar too. Here's a sizable fat green bar. Here's a decent fat green bar. Here's a fat bar. Here's a fat bar. Here's a fat bar. Fat bar, fatty, fat bar, fat bar. You know, so now we do have periods of fat reds, and we've got periods of fat greens, but which periods are more enduring than the other? So when I get a series of fat reds, is it short-lived as compared to the series of fat green? Do I get a longer run of green bars on average than I do red bars? 1 bar, 3 bars, 2 red bars, 1 red bar, 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 2 red bars, 2 red bars, 2 red bars. Now look at the greens. Let's look at your set of greens. All right. Let's erase this. Let's look at your set of greens now. Okay. Greens in a row. 1, 2, 3, 4, 5 greens in a row. 1, 2, 3, 4 greens in a row. 1, 2, 3, 4, 5 greens in a row. Look at this run with small interrupts of red. So it is very clear right from just the monthly chart, buyers are in control of the stock. You should be betting most of the time on the buy side, not the sell side. You see, we don't usually bet with the underdog. We bet with the dominant force. That's the easiest way to make money at this game. All right, so that's the monthly chart. Now, what we want to do, right? We want to put a 20-period simple moving average of that monthly chart on the chart. So here's a 20-period moving average now. Now, I want you to note that the 20-period moving average is rising. This is very important because the easiest way to make money is to wait for whatever you want to buy to have a rising 20-period moving average. And then simple, you want to buy somewhere near the 20-period moving average, 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 near. But the last thing you want to do is buy away from the 20-period moving average. The last thing you want to do is buy away from the 20-period moving average. Do you understand? Away, no. Near, yes. So here's what we do. And I'll cover more. I'm going to cover this in greater detail. This is just building the general foundation for you. We come in near the 20. It can be a little bit below. A little bit below is near it too. Don't let that fool you. So you're either near it, a little bit above it, on it, or below it. Look, near it, above it, near, on it, near it, below it. That's your zone of near. So don't think that this is breaking it so much. It's still near the moving average. All right. Oh, I like to regard my moving averages more like zones. So if we built the zone around this moving average, look, let's put that up. I'm drawing terribly, but let's put that upper portion and let's put that bottom portion. You see? Now, this is my moving average zone. You see? Don't look at the moving average like a little tiny skinny line. It's a zone. It's a fence that you can lean on. It's a rubber band. It's like the ropes of a boxing match where the boxers can lean against the ropes, boing, lean against the ropes, boing, but not break the ropes. Okay? So don't get fooled by these little leans against the ropes. That's leaning against the ropes. That's not breaking. So we want to come in to the market near, it has to be rising, near the rising 20, near the rising 20, near the rising 20. And look how perfectly you would have bought. You want to start reducing your play away from the moving average, away from the moving average, away from the moving average. So you reduce and add. You reduce and add. You reduce and add. Now, I got to ask you this. I got to ask. Do you understand this so far? Are you picking up what I'm laying down? Are you following this? Let me know. I want to see your comments. Are you following me? All right. Rising 20. Find something of value. Find a Facebook, find a Microsoft, find a Nike, find a Disney, find a Coca-Cola. Find something that you know is super powerful. Wait for that 20-period moving average to be rising. And then we play the directional game. Do you understand? We play the directional game. You want to play with the 20-period moving average, and you want to come in near the 20 and get out away from the 20. We come back near the 20 and get out away from the 20. And my God, just that simple approach, you can build a freaking fortune. Now, you can't go out and buy Joe Schmo's pizza shop on 42nd Street. No, I'm talking powerful, very rich companies. Tesla, Microsoft. Do you understand? Apple. Do you understand? You buy powerful. You buy wealthy companies. You buy powerful companies. You buy innovative companies. You buy companies that you know this company is going to be here long after I die. You don't take a gamble with your family's money on Joe Schmo's pizza shop. Well, the guy told me that he's going to grow this little pizza shop into 2,000 pizza shops, and I'm going to invest. All right, you want to throw some throwaway money into something like that because that's your friend, fine. But when it comes to building real generational wealth, guys, We stick with the wealthy, dominant companies. Do you understand? And it makes the game simpler. It makes the game more secure. It makes the game more certain. Now, all we need is a method, which I'm teaching you. You don't have to guess what to buy. Now you have a list of what to buy. Now wait for rising 20-period moving averages on that monthly chart. And now go to work. Buy in near the 20, reduce away from the 20. This is all general right now. I'm gonna drill this down into specifics for you. Okay? Beautiful. All right, let's go. Let's go. Let's do it. I love this game, guys. I love this game. Love it. All right. Now, we're going to take the 50-period moving average and overlay it. I showed you what to do with the 20, but now I'm going to deepen the game for you. I'm going to make this more special than just the 20. We're going to add the 50-period moving average, and we're going to create with the 50-period moving average this zone between the two. Oh my God. Now that's that juicy buy zone, guys. Oh my God. When your stock, when you're wealthy, super rich, super powerful company stock drops between a rising 20 and a rising 50, you should begin to salivate. You should be so giddy, so happy, so anxious that you're going to burst out of your own skin. Now, once that happens, I want you to play the color game, which I will talk about in greater detail in just a bit. What's the color game? Buy whenever green, once you have slipped under between the 20 and the 50, that's the zone, right? You buy as soon as green trades above red. Boom! You see how this green trades above red? Boom! Now look, we slip between a rising 20 and a rising 50. When does green slip back above? Boom! And you can do that near the 22. Look at red. Look at, we slip back between, this is during the coronavirus collapse, between the 20 and 50. Boom! Let me do that sound again. Let me do it with a different color. Wait a minute. Let's try it with another color. One more color. I just like doing that sound. Away! Time to take some off the table. Reduce. This game is all about knowing when to beef up, when to add, and then when to reduce. When to add to your well plays and when to reduce. When to add to your well plays and when to reduce. And with the 20-period moving average and the 50-period moving average, we've got a simple but extraordinarily powerful approach to playing the richest companies on the planet. Powerful! Now, let's keep going. I'm just still laying the foundation. We haven't even gotten into the detail yet. All right? Okay. We're going to add the 200-period moving average on the chart, right? So we're going to have 3 moving averages on our charts. Now, here's the thing, guys. Our most ideal buy range is between the rising 20 and the rising 50. There are going to be times when your stock collapses back, falls between, but actually breaks the 50. When your stock breaks the 50, your play is near the 200. you go to the next long-term moving average to play. There's a high percentage of the time that once you severely break the 50, you're going to go all the way to around the 200. Not all the time, but a lot of the time. So we're going to play off of these three key moving averages. Sometimes you're going to play off the 20. Boom! Green takes out red right there. Boom! Green takes out red right there. Boom! Green takes out red right there. Boom! All right? But sometimes you're going to be playing that way down here. Boom! Off the 200. Okay? So we're going to play off of these three. So sometimes you're going to play off the 20. Let's do this a different color. Look at this. Sometimes you're going to play off the 20. Sometimes you're going to play in between the 20 and 50. And sometimes you're going to play off the 200. These are our most ideal buy-in locations. But remember, your company has to be super rich, super wealthy, super dominant. We want to play things that have enough money. We want to play companies that have enough money that they can buy the solution to any problem that they ever experience. Do you understand? That there's no sitting around like we don't have enough money to do that. Recognizable names. Joe Schmo's pizza shop on the corner? No. Quality. All right. All right. The color game. You know this. We're going to hear the color game rules, traders. We're going to trade. Sorry. What am I doing? We're going to trade with 20 period moving average. So the 20 is rising. We're going to buy. Remember, you come in, buy. Boom. Or if it slips back between your two moving averages, boom. Right? So you're going to trade with that 20 should be rising. We're going to buy the color transfer. Green takes out red near the 20. We're going to do the color transfer. Green takes out red between the 20 and 50. All right. So let's do it like this. 20, 50. So you're going to buy the color near, boom, the 20 right there. Or between the 20 and 50 right there. Or near the 200. These are our spots. You, as a market player, must define your locations, like as if, guys, let me do this. I need to look you in your faces. Let me look you in your faces. Gotta look you in your faces. That's what I want to do. Yeah, in your faces. And look, listen to me carefully. Traders, you have to play the market the same way you would play the real estate market. You've got to play financial markets the same way you would play the real estate market. So what's the most important thing in the real estate market? Well, there are three important things in the real estate market. Number one, location. Location determines value in the real estate market. You can have the best beautiful house in the ghetto and it just won't seek out a good value. Location is wrong, right? So first thing, First key to making money in real estate, location. Second key, location two. Location. Third thing, location. Location, location, location. Nothing else matters in the real estate industry. Nothing more than location, location, location. All right. Now let's take that concept to the market, to the financial markets, right? What's the key to doing this properly? Location, location, location. I just gave you your 3 locations. What are those 3 locations? At or near the 20 period moving average, location. In between the 20 or 50 period moving average, location 2. At or near the 200 period moving average, location 3. Location, location, location. Whoo! That's the game. That's the game, traders. Here's to you. Love it. I love it. I love enlightening you. I love the challenge of taking what has historically been a very complex topic that's kept people away from this for so many years. Big mistake. But I love the challenge of taking what has historically been a complex thing and breaking it down so that my Brock, my 11-year-old Brock, can understand this. It's not rocket science, traders. This is not rocket science. In a way, the industry wants you to think it's rocket science because they want to sell you stuff. But it's not rocket science. A few simple but powerful concepts can really make you fabulously wealthy. But you got to start. It can't just stay an idea. Do you understand what I'm saying? You got to start. I don't care if you start with $500. You got to start, traders. You can't just watch YouTube videos or watch live sessions with me and say, wow, that was great, and go on with your regular life the next day or the next hour. You got to start, man. You got to start putting something in on the line, putting something in. And I'll help you do that. I'm telling you, I will help you do that. All right. Let's go. Let's go. Whoo. All right. Boom. All right. So we got our 3 locations. Now, what I'm going to do now, guys, this is by no means an exhaustive list of what we have done over the past 10 years. What I've taught you so far, I'm going to go to my wealth plays, many of which I've done with my wealth trading team. All right. Which you can be a part of as well. But guys, look at what we did. Look at some of the things that we did based on what I've just taught you right now. These are our plays. Are you ready? Let's go. Apple. Now, I start off with Apple for one simple reason. I own Apple from a split adjusted price of $2.65. Apple today is near $500. Next week, it should be splitting 4-to-1. All right, so I'm back down into the mid $100 range, which is going to be a beautiful thing. Okay. Now, I want you from $2.65 to $500. That's crazy. And yes, we still own it. We don't own as much of it because remember, away from the moving averages, you reduce, you reduce, you reduce, you reduce, you reduce. But what do? You add between the 20 and 40. You add, you add, you add, you add. Do you see how freaking easy this is? I mean, I'm almost embarrassed to say how easy this game is if you do the right thing. It's not easy if you do the wrong thing. It's really hard. And I'm only going back here. But guys, the last major buy that we did in Apple came here and there. These were huge buy-ins after many others before it, but these were especially heavy buy-ins right there. All right. This was a buy-in as well. I didn't grab Apple here, and I'm not overly happy about that, to be honest with you. But I was expecting a little bit more drop, and I didn't get it. But I did reduce here. So I missed putting a portion of that reduction back into Apple here. I made a mistake. But it's an understandable mistake because we didn't slip back like we did here and there and there in the past, you know? So I was expecting, you know, maybe another bar down there. And I just didn't get it. It just rebounded out of it too early. But look with this method, what you would have known to do. Oh, Apple's between the 20 and 50. I just wait for green to take out red. Boom. Oh, Apple is between the 20 and 50 again. Here's green taking out red. Here's green taking out red right near the 20. Here's green taking out red. Here's green taking out red, not too far from the 20. And even here, here's green taking out red. And you would have known to reduce away, reduce away, reduce, reduce, reduce. Now listen, don't reduce to zero. Listen to me carefully, traders. I gotta look in your faces again. All right? Please. Listen, you have to understand this. Look. We are going for generational wealth. I need you to understand this. I need to help you break this cycle of the next generation starts off from zero again. No, your kids don't start off from zero. Their kids don't start off from zero. That every generation should be higher. So here's the approach that I teach all of my wealth traders. When your stock doubles, so you buy a stock at 20, it goes to 40, that's a double. You sell out of 80%. 80%. You keep 20% forever. I will allow you to go down to 10%. But you should try at first to only sell out and pocket 80% of your 100% gain. The 20% is the legacy portion of your wealth. You never sell that. Now, when you take 80% out, it pulls back to the 20. You put more money in to add to the remaining 20%. It goes away from the 20, 80%. 20% left, but the 20% keeps getting bigger and bigger. It pulls back to the 20 again, or between the 20 and 50, put more money in, away from the 20, 80%. 80, keep 20, put more money in. 80, keep 20, drop, put more money in. 80, keep 20, put. and imagine where you're going to be 10 years. You're making money along the way. You're taking 80%, putting in your pocket, buying a house, buying a new car, vacations, whatever. That's fine. That's the 80%. Take that 80%, use that. But 20% is for your kids. 20% is for the next generation. 20% is that amount that just over time grows and grows and grows. And it's like, oh my God, look at what I have amassed in Apple over the past 20 years. Look at what I've amassed in Microsoft over the past 12 years. Look at what I have amassed in, NVIDIA. Look at what I've amassed. And you get the point? So with this style, you enjoy, not every day. Every day is more day trading. So you got your day trading going on, enjoying every day, every week. You've got your wealth, enjoying every few months to 2 times a year. Boom, but big money, right? Keep that 20% in. And so you got these things moving. Your day trading's going. Your 2 forms of wealth is going. Take 80% out, put more in. Take 80% out, put more in. That's one part of wealth. Keep 20% in there forever. And let that 20% portion just grow and grow and grow and grow. And before you know it, you will have this basket of legacy holdings. That's what I call those growing 20%. 20% in Apple, 20% in Tesla, 20% in NVIDIA, 20% in Disney, 20% in Nike, 20% in Costco, 20% in Walmart, 20%. Do you follow what I'm saying? And then you will have this basket of legacy holdings that just grows. And one day in your future, you just sit back and just check the prices today on your legacy portfolio. Oh, not bad. Up $20,000 today. Cool. The whole basket rose 20,000 today. Nice. Nice day. This will take care of you forever, but not just you. It will take care of your kids. It will take care of their kids. You know what you do? You sign that legacy portfolio over to your next generation in a will or in a legal document that precludes them from selling it. Don't ever let your next generation sell, ever. Do you understand? Let them live off of, don't ever let them sell below that 20% or below the 10%. You go to 10%, but don't let them ever sell that. There are ways to live off of that legacy portfolio without selling it. Now, that's a different talk. But the way the wealthy do, they have these portfolios that they never sell, but they use this portfolio as collateral to buy stuff without ever selling. And these are the things I teach my wealth traders to do. I teach them boss moves, wealth moves. We live amongst the wealthy. Oh, yes. Okay. Let's go on, guys. Let's go. Let's do it. Let's do it. Let's do it. I'm not finished with you yet. Look at Adobe. Guys, you can look at this chart now and know exactly how Adobe was played. Okay? Look at this point here in 2016. Look at the slip between the rising 20 and the rising 50. Look at the green taking out red not too far from the 20. Look at your coming back to touch the 20. Look at the green taking out red not too far from the 20 here. Look at the corona collapse. Going right between the moving averages and wow. Guys, I'll give you something. I'll give you something really cool. I have outperformed with this simple approach virtually every single major portfolio or professional institution that focuses on playing for big gains. That includes Warren Buffett. A lot of people don't understand that Warren Buffett has averaged about 18% over the past 35 years. Now, granted, he's doing that on billions of dollars, and I'm not doing that on billions of dollars. So it is easier for me to outperform Warren Buffett. All right. So I am way beyond 18% with this method. A year, I blow this number away. Now, I'm sure Warren Buffett would blow even that away if he didn't have so much money. It's harder to do it with a lot of money. It's easier to do it with less money. So granted, I'm not saying I'm better, but I'm saying that my approach for us is better than Warren Buffett's approach. His approach is not appropriate for you. The world wants you to follow him, but that is the wrong approach to follow when your money is not Warren Buffett type money. He has to do things that match billions of dollars. He would play very differently if he had less capital. And so I'm teaching you how to play this with non-Warren Buffett money, which will outperform Warren Buffett virtually year over year. You understand? All right. Warren Buffett can't just buy above this red bar right there. Boom. He can't. He doesn't have enough time to collect 4 million shares. There's not 4 million shares available right there. Now the stock has left him. You understand? You can't do it with that kind of. We can do it. We can be pen pop. Look at this green bar. Take out the red bar right there. Boom. We can strike. He can't strike there and grabs 10 million shares. He needs time. He needs many months to accumulate 10 million shares. Many months. So he can't be pinpoint like we can. Makes his game harder. All right. All right. AMD. Some of you know this now. Guys, look at, remember the 20, remember the 50, you're going to buy off the 20, you're going to buy out of the zone between the 20 and 50 and the 200, right? 3 locations, right? Look at the 200. Boom! 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 Right off that 200. That's crazy. Now, you should know what you should be doing now. You should be reducing all the way down 80%, reduce 80%, keep 20%. Let the 20% fall. It's no big deal. You've already enjoyed this. Now you can go spend that. You know why you can go spend that if you want to? Some people take this and put it into another play. That's fine. Another stock. All right. And some people go buy a house. All right. That's fine. Some people buy a car, nice fancy car. You know what I'm saying? That's not a fancy car, but you know what I'm saying. Do whatever you want to with this. Just as long as you're maintaining that, you're building your future. Do you understand? You're growing your future with this portion. Don't ever forget that. I've been doing this from 1988. Why did I start in 1988? Because the crash of 1987 set the market up to begin this for me. The crash brought things back to their 200s. And that's when I began in 1988. After the crash of 1987. And I've utilized every crash since then to find the value of stocks coming back to their 200s in particular on major crashes to begin the wealth cycle all over again. All right, beautiful. Guys, you can do this. It's not rocket science. Look at my Amazon. Guys, I own Amazon from $7.25. That's all the way back in the past. But that's when I first started the wealth. Now, when did I start with Amazon? After the crash of 2000. So the market went up 2000, crashed. Amazon, with the dot-com bubble, came down like that. $7.25. Boom. Started with Amazon. Now Amazon is almost 4,000. And I've maintained a growing 20% since then. Crazy, right? Taking profits away. These don't look far away, but they're really far away. Away, away, away. But come back in. Come back in. You see? Away. Away. Come back in. See that? Come back in. Wow. Crazy simple, but powerful. Look at Baba. If you think that China is the future, I do. You got to play Baba. And things like JD. You got to play. You got to have some China exposure in your wealth. Boom! Right off that 20. Look at your moves between. Look at the betweens. Boom! Look at the coronavirus drop. Right in between. Love it. I feel, in a way, almost embarrassed how simple this is. Etsy. Newcomer on the block, but very powerful here, guys. Very powerful. Got to take away. Look at you coming in between. I cut the prices off here, but wow, these are huge runs, man. And Etsy. And you know you got to be taking, reducing 80%, maintaining 20%. Beautiful. I love it, guys. I love it. I love it. I love it. Facebook. Now we're in Facebook, guys. My wealth team and I are in Facebook at $18 and $24. 24 and 18. 2 entries. That's going all the way back here. See? Look at the $20. Now go all the way back to the beginning. We're buying here. Boom! And here. Boom! Right near that 20. And then look at this thing. It doesn't even really get that far away. It's so powerful. It doesn't get that far away until here and here. Boom! Right between. Here's the, now guys, I can show you this on Facebook, me giving my wealth team. Should I show it to you? I should show it to you. Giving my wealth team, we're selling Facebook now. It was above 220 right before the collapse. Boing. It's beautiful. My wealth team will tell you. We sold these things perfectly, man. Boom. Boom. And now, again, there might be some more up here to be selling. All right. Google, Now, I own Google all the way back from the beginning to mid 2000s, guys. You know, it's crazy. But you can see, it's not that old, but boom, boom. Look at your slips between the 20 and the 50. Look at that. Just beautiful opportunities. And look at NVIDIA. NVIDIA we own from $9.50. All right. So that's way over here somewhere. But look at this. Look at the run from $9.50 to 280. You're taking your 80% out, pulling back. You're going back in here in your zone. Here's the Corona drop, just briefly. And you know what you should be doing here. We're now above 500. Guys, look, $9.50 to 500. That is insane. And still going up. Got to get out of 80%, hold 20, and we wait for the next opportunity. It's a simple but powerful game. And I'm going to walk you through this. And guys, Microsoft is huge. Now, Microsoft, we're in at $24 and $28, 2 entries. All right, that's all the way back here, all the way back in this range. But look at your opportunities later. Boom, off the 20. Boom, off the 20. Boom, off the 20. Microsoft's so powerful, it never slipped, except here a little bit. It never slipped between, not even during the Corona collapse. It went to the 20. And you got to be thinking about reducing. I can show you my message to my wealth traders to get out here near 200. We got out so perfectly before the collapse. And we will be reducing really soon again by 80% again. All right. Now, guys, I'm going to skip this portion here because we don't need this today. We don't need this today. But what am I doing here? So I hope that what you can see from my wealth approach, that it is a simpler and easier game. And the money's bigger. The money's bigger. Now, here's where you have an advantage today than many of my wealth traders had back in 2009. Do you understand? Here's why. My wealth traders in 2009, when I started my wealth trading program, they needed big money to play like this. Now things have changed where, first of all, commissions in your retail brokerage firms have gone to 0. Now, I would never trade with them day trading because you get really robbed there in day trading. You lose 2 or 3 pennies at a time in day trading, and that's a freaking fortune. All right. But losing a couple of pennies on a well play that you're going to be holding forever, 80% out, holding 20%, going back in, that doesn't matter. So now commissions are 0. All right. Number one. Number two, there are many firms that will allow you now to buy fractional shares. So you don't have to worry about, but Apple's going to be Apple's almost $500 now. When they split next week, they're splitting 4-1. It's going to be $100 something, right? Okay. So, I mean, it's going to be maybe high 100s, low 20s. It depends, but low 200s. But you don't have to worry about Apple being 200, so buy a fractional share of Apple. Listen, a $500 investment is a $500 investment, whether it's $500 in a $20 stock or $500 being put in a $500 stock. It's still $500, right? So now with the ability to buy fractional shares, you don't need the big sizable accounts that you traditionally needed in the past. And now commissions are zero. What? You got to be doing this. You got to do this for your family. You got to do this for your kids, your grandkids, or whatever, your next generation. You got to do this for the house you want, the cars you want parked in the garage, the vacations you want to take once we can start flying again. No one should not be wealth trading, guys. No one. It's not something you do when you're old, because I am telling you, time is a huge wealth builder. The earlier you start, the wealthier you'll become. You know, it's crazy. So the advantages you have now are so huge. I'm constantly telling traders, because I get many of my traders say, Oliver, man, I wish I started back when you started back in the 1980s. No, you don't. You don't want to start when I started. It was horrible. Dude, I had to write out a ticket, sign my name, my trader number, 1,000 shares, and then run down the hall, stand in line, wait to give it to the order taker guy, wait my chance. And then he would read it, and I'm like, please, the stock is moving. Just timestamp it, please. Like, you didn't want to trade back then like that. You don't want to have to go to an office and pay $1,500 a month to sit down, to have the right to sit down in the chair, because how were you going to trade? There was no bringing the data into your home back then. There was no trading from a computer back then. You don't want to start there. Today is the very best time ever in the history of financial markets to get involved. Today, better than last month, better than last year, better than last decade, better than any other time in history. Today is better than any other day in the history of the financial world. Zero commissions, fractional share buying. I wish these things existed. Oliver Velez to guide you. Come on. I wish there was an Oliver Velez to guide me. So fewer mistakes. Do you know that one mistake cost me $1,600,000? $1,600,000, almost $2 million. Like, just if I could just sidestep some of the mistakes I made by having someone to guide me that had been there and done that, that's huge. That's priceless. It's priceless. You understand what I'm saying? So anyway, guys, that's what I want you to do. Now, I'm going to cover this last part. I'm going to talk about something really interesting here. And then I'm going to present to you an opportunity for us to do this together. Okay? So let's go. Let's get to it. We're coming to an end here, but it's a very powerful end. Now, remember I told you we want to reduce away from the 20. But wait a minute. That means that in order to play again, we have to wait many months sometimes. I know it didn't happen many months here, but we might have to wait 1, 2, 3, 4 months. We might have to wait 7 months. We might have to wait 5 months. We might have to wait 4 months to have another play. We might have to wait 12 months. So what do we do during this time? We want to play the benefit this way, down. Well, how do you play the benefit down? If the market's going to drop back toward its moving averages, how do we profit from the down while waiting to come back in on the buy? That's what I'm going to cover with you next. It's a beautiful thing. All right. So I got to skip all this really fast and go straight to we want profit from away to down. How do we make money? I told you how to make money on this side of it, right? And you reduce. How do we make money on this side of it while waiting to come back in? That's what we're going to cover now. You do that. We do that through ETFs. Okay. We do that through ETFs. So here's where we are today. Look at where we are today. This was 2000 on the NASDAQ. And look at the collapse. Now this is 2020. What do you think we're in store for? It might get up a little higher, but oh my God, it's coming. And I need you and we need to be prepared for that. And I promise you, I'm prepared for it. And I am going to benefit from this side of the cycle as well while waiting to start accumulating again. You understand? There's the 20, there's the 20. Again, there's between the 20 and 50. And we'll get this again, but we're getting this next. That's what's next. We're getting the downside next, guys. As you can see, we've already got the away. The downside is next. So how does a wealth trader benefit from the downside? We use what's called ETFs, exchange traded funds. And this is how we offset some of the losses that we're going to experience by that 20% that's going to fall, right? So let me, this is Warren Buffett's performance. Guys, this is Warren Buffett's performance. Nice. But there's someone who has, there are a number of people that outperform Warren Buffett. Now, granted, Warren Buffett is playing with much larger money, which makes it harder. But this is beautiful. But look at, for instance, Cathie Wood's performance. Now, this is an ETF, you see? This is Cathie Wood's ETF. She's a brilliant market player. And you can actually mimic what she's doing by buying ARKK. She kills Warren Buffett. You can literally just wait for ARKK to come in between the 20 and 50, just like you would any stock, or above. Green takes out red, and you can play side by side with one of the most brilliant minds in the game right now, Cathie Wood. This is Cathie Wood. And so by buying ARKK, you are buying everything in her portfolio. She does the work, you benefit. Crazy, right? Same thing with Warren Buffett. Warren Buffett's entity is, wait a minute. Warren Buffett's entity is Berkshire Hathaway, but this one is $4,556. Now, of course, you can buy fractional shares today, so that's fine. But this one's more dynamic. Now, ARKK is also known as a lower price Tesla. Tesla. Why is Cathie Wood's ARKK known as little baby Tesla? Because her biggest investment is Tesla. So I think Tesla represents some huge percentage of her portfolio. So if you look at Tesla, it looks the same. because Tesla is her biggest holding. So if you want a cheaper way to buy Tesla, you buy ARKK. It's called in the industry the baby Tesla. Valuable information, guys. But here's a way to track Cathie Wood. Now, why do I mention ETFs? Because we're going to use ETFs to play the downside. Now, the ETFs I want you to be aware of, if I don't know if I put these in there. So what I'm going to have to do, guys, is show them to you differently here. Give me a second here. Give me a second. I think that I'm going to have to show you, shoot. Let me just see. I just want to make sure. Give me a second here. Let me make sure. I'm going to see if I did this with you, but maybe I didn't. I didn't. So here's what we're going to do. Okay. I am going to bring in the ETF I want you to focus on. All right. Give me a second to put it up for you. Okay. And we are going to look at, where is this? And we are going to look at, okay, good. All right, let's do it. Let's get back to it. That wasn't so hard. All right. Now, very important here. Let's go. Boom. This is the NASDAQ. Okay. I want you to take a look. This is into 2000. And this is where we are now, for the most part. 2020. As you can see, we are very far away, the same way 2000 was very far away from the moving average, the price, the 20, the 200, price, 20, 200. Okay? So this is coming. We could go up a little higher, but this is coming. Now, there's an ETF called QUID, QID. QID. I'm going to write the symbol. QID. This index or ETF trades opposite to the NASDAQ. So when the NASDAQ drops, QUID rallies. When the NASDAQ rallies, QUID drops. But get this, it rallies, I believe, 3 times more than NASDAQ drops. So if the NASDAQ 100 drops 10%, QUID rallies 30%. You understand? So it's 3 to 1. It could be 2 to 1. I'm not mistaken, but I think it's 3 to 1. If it's not, it's 2 or 3 to 1. I don't want to check right now. You can do the checking. But anyway, it's a souped up way to profit on the downside. By buying QUID, listen to me carefully, by buying QUID is shorting the NASDAQ. Do you understand? If you buy QUID, you are betting on the market dropping. Okay, so let's go to QUID. Now look at NASDAQ. Now look at the NASDAQ. Boom. Now look at QUID. It's inverse, right? So we are at $9.56 right now. Is QUID going to go to 0? No. So your downside's not $9.50. Okay. If I'm right that the NASDAQ will soon start this in the next few months or whatever, if I'm right that that's what happens, this is going to happen to quit. We could go from 10 to like 30, 40. That's huge. So what do you think I have my wealth traders doing now? We are easing in to quit in anticipation of your NASDAQ dropping and quit, boom, boom, rising. But I want to walk you through this strategy every step of the way. And I want before the middle of next year, you to be wealthier than you've ever been in your life with this play. I want to be there with you every single week, every single month. We do it together. And while the market's coming down, we prepare to start our whole brand new wealth cycle again. Once our most favorite things come back toward the 20, come back between the 2050, come back to their 200s, we start again. And we play this cycle over and over and over again. Now, traders, listen to me. Listen to me carefully. You can play with Warren Buffett by buying Berkshire Hathaway. If you buy Berkshire Hathaway, you are playing with Warren Buffett. He's got an average 18% over the last 35 years. It's actually between 15 and 18%. All right? Not bad. Certainly beats the market. Okay? You can play with Cathie Wood by simply buying ARKK. I even play with Cathie Wood. Nothing wrong with that. But you can also play with Oliver Velez. Now, why do I put this chart with me? Because just like with Cathie Wood, right? Sorry about that, guys. Just like with Cathie Wood, her biggest holding is Tesla. So her chart will look more like Tesla's chart, right? My biggest holding has always been Apple. That's what my chart looks like. If you were to take all of my plays and put them in a basket, it would look more like this. My numbers have trounced Warren Buffett's numbers. This is all documented from 2009, guys, and has trounced Cathie Wood's as well. I respect them both, but I've outperformed them. And here's the wonderful thing about the internet. It's one of the wonderful things. The internet has very terrible things about it, but there are some wonderful things about it as well. One of the wonderful things is that when you put something on the internet, it creates an electronic footprint forever. And every single buy, every single sell is documented on the internet. It's unerasable, irrefutable. Each one of my plays, my Microsoft at 24 and 28, my Nvidia at $9.50, my Home Depot at $25, now it's almost $300. My Apple last buy in the 90s, now it's $500. My Baba, my PayPal, my Square, it goes on and on. My McDonald's at $60. My Costco at $60 as well. Guys, it's crazy. So this is your opportunity to play alongside with me, just like you can play alongside with Cathie Wood, just like you can play alongside Warren Buffett. But I have beat their numbers. I'm playing with less, granted, which makes it easier for me, but I beat their numbers. Now, how do you do that? Look, I look at this price, $4,000 for my program. Now, listen, I want you to understand this totally. This is forever. Forever. There's no hidden fees. There's no additional cost whatsoever. $4,000. And I am by your side on the wealth game until you die or until I die. I'm not planning on dying, guys. All right, forever. Every move I ever make, we meet sometimes several times a month. We get together at least once a month. We go over things. We cover the market. I am talking to you throughout the week about my specific moves, what I'm doing, what I'm playing when I'm saying, let's get ready to buy in. I'm buying in tomorrow. This is the price range. I'm protecting myself here. I'm taking profits on this stock now. I need you to take profits as well. Every single move forever. Now, one play can get this back for you. But listen to this. Check this out. In the past, when I started in 2009, my wealth program, the program was $10,000. I had 400 people. This is not a course, guys, even though I'm teaching you along the way every month of your life. It's not a course. It is a lifelong program. I don't sell courses and tell you and say goodbye after the course. This is a program. It's a very different thing. All right. Now, it used to be 10,000. Now it's 4,000. But check this out. If just because you attended this, I'm going to give you the program for 50% off, 2,000. Now, guys, take a $2,000 course, not a course. Take a $2,000 program. Take this fee. I want you to do something for me. Watch this. You're going to take $2,000, right? You're going to divide this, right? Over 5 years. There's 5 years, right? There's 1,825 days in 5 years. So what's this cost per day over a 5-year period? I want you to look at it like that. So what you're going to do is you're going to take 2,000 divided by 1,825, and you're going to get $1.10 a day. It's a freaking cup of coffee. Not at Starbucks, though. Starbucks will cost you $4. $1.10. Can I deliver more value to you than $1.10 a day? Oh, you bet you. What I shared with you today is worth more than that. Now, if you take this out over 10 years, you plan on being with me 10 years, 20 years, this becomes nothing. I need you to think of it that way. We're talking long-term wealth. You got to think the cost spread out over long term. It's nothing. But I'll even go further with you. I'll even go further, traders. 48 hours, $1,800. I'll knock an extra $200 off. Now you're below $1. Having me in your corner every week, every month, for the rest of your life, following my every move, knowing what I'm thinking, what I'm going to be doing next, what I'm looking at, having study sessions together forever. Guys, is it worth 80 cents a day, 90 cents a day? Oh, you bet. The number of traders I have helped create or amass enormous wealth is mind-boggling with this program. Like I told you, most traders, most are most people know me for my short-term oriented play. That's what I became famous for. But only a few know that over 90% of my funds are deployed this way. This is where the big money is. And the only reason why I am opening this up again, I will tell you this because I closed this. I wanted this to be intimate. Do you understand? I don't want a zillion people in this group. But the only reason why I'm opening it again, because it's time for another major opportunity. You see where these things are way up there. It's time. Wow. And it's close. That's number one reason I'm opening it again. Number two, the world changed to make it better. With zero commissions and fractional share buying. Wow. That didn't exist before, traders. It didn't. So now it's time to bring a whole new generation into this. And it's time for me to walk you through and show you how. Do this over the next 5 years. Oh my God. Oh my God. Generational wealth. That's what we're going after, traders. Generational wealth. Trade for wealth. All right. Guys, I know that there are so many things that you could be doing today on a Saturday. What time is it? It's 12:15 my time. For some of you, it's 11:15 or whatever. Some of you is different time frames all over the world. But I know you could be doing. So you could be at the mall. Yes, some of you could be at the mall, walking your dog around the block, playing with your kids, spending time with your wife, your husband, whatever it is that you do, watching sports channel. But you're here with me. And it is something I tell you that I do not take for granted. Thank you so very much for your time. Thank you for your trust. Thank you for your support. And guys, I will tell you this, every time I'm given the opportunity to stare you in the faces through my camera, every time I'm given the opportunity to speak through a mic at a podium or address you in any way, I try to come with something very powerful. I try every single time I open my mouth to make sure that those who took their most precious commodity and gave it to me, which is your time, is your most precious commodity, more than your money, is your time, that I do my best to make sure you walk away with something that you will be able to use, something powerful, something effective, something productive that you will be able to use for the rest of your life. I truly hope that I have met that very high goal today. Trade for wealth, guys. Let's do it. Let's do it together. Boom. Yeah. Woo. The world, Chico, and everything in it. What movie is that from? Want the world, Chico, and everything in it. I want the world. Love you. Boom. Boom. Photoshop. Woo! Yeah. You know it.